Good evening. Before starting with the presentation, let me introduce you the Swiss team members. We have Valérie, Anne, Marie-Caroline, Fabian, and myself, Louis. We are all very pleased to welcome you and to present you the result of our research on Autoneum. Autoneum is a Swiss small-cap company active as a global Tier 1 supplier of the automotive industry. It is specialized in the niche market of acoustic and thermal solution management with 4 main product categories and the aim of increasing the car comfort as well as the car efficiency thanks to lightweight solution for large international car manufacturers. Autoneum operates on a global scale. However, when we look at the sales by business group of Autoneum, we can easily see that Autoneum is highly dependent to mature markets. It is also reflected by the fact that 75% of their facilities are located in mature markets. We initiated the coverage of this company with a sell recommendation based on our target price of 100 Swiss francs and a current potential downside of 49%. All our analysis is based on 4 pillars that we will present you with their impact on our valuation. And I let Valérie introduce you the first pillar.
Our first pillar is that Autoneum has an inadequate footprint. By looking at Autoneum sales, we observe that the company is largely exposed to mature markets as Europe and North America, with 87% of sales in this area. But if we look at the trend of the industry, we notice that the most important market is Asia, with 52% of the total car production. Autoneum is missing the trend and the growth potential. The company says that it tried to expand in emerging markets as EMEA and Asia, but if we look at its capital expenditure allocation, we notice that the investments are not that important. The company's geographical positioning is inadequate because it relies mostly on developed markets as Europe, which are saturated. The company needs to restructure its production and close some plants. Furthermore, the company is not enough present in growing markets, and its efforts to correct it are coming too late because barriers to entry are more and more important. In conclusion, Autoneum is not enough present in strategic markets, and its efforts to correct it are coming too late. Since the 4 business groups face different challenges, we have decided to forecast the sales growth individually in order to capture the heterogeneity of each area. Then we have combined them to obtain the company's expected sales. For the reasons that I've just mentioned, we expect that Autoneum growth will be mainly driven by North America and Asia, leading to a global CAGR of 1.8%.
Let's turn to our second driver. Autoneum operates in a highly competitive environment, facing strong pressure from customers and suppliers, resulting in structural difficulties to improve its profitability. First, the large car manufacturers have low switching costs, which give them sufficient power to impose their conditions. By combining this with the long car life cycle, Autoneum has a reduced bargaining power and a high dependency on large-scale contracts. Therefore, Autoneum may be forced to accept less favorable terms in order to maintain its critical partnerships with customers. On the other hand, in the resource-intensive sector, Autoneum is highly dependent on oil and aluminium suppliers, which directly impact its cost of production. Finally, jammed between highly diversified firms and niche players, Autoneum is also facing competition from local low-cost component firms in Asian markets. Therefore, all these challenges lead us to expect that Autoneum will not be able to improve its gross profit margin above 48% in 2017, especially due to its weak pricing power and the rising raw material prices. As our third driver, Autoneum is less efficient than its peers, despite a slightly improving trend in 2012. Especially, the operational program has allowed Autoneum to improve its sales per employee and the management of receivables and inventories in 2012. Also, Autoneum tends to optimize its fixed asset basis, driven by the restructuring in Europe, but its return on assets remains insufficient compared to its peers. Finally, additional improvements might be limited by its weak flexibility and low negotiation power.
This results in a lower NOE of 9% in 2017. Indeed, the financial leverage will decrease in order to achieve the 30% equity ratio target and will not be compensated by any improvement of the operating efficiency, neither asset use efficiency. And this lower profitability can affect shareholders. So let's turn to our fourth pillar. Despite its positioning as leader in innovation and compared to its peers, Autoneum does not have enough research center worldwide and has a limited budget devoted to R&D, only 3.5% per net sales. Even if Autoneum has innovative technique, it should strengthen its innovation in order to remain competitive, to support new R&D for car manufacturing and outsourcing, and especially to meet the legal and environmental restriction at the CO2 emission. Furthermore, the portfolio of products is not enough diversified. The heavy exposure of 48% to the interior floor is risky, since interior-focused auto component suppliers suffer from a low profitability level and a low growth potential. So these two weaknesses put pressure on margin and can weaken Autoneum market share. So to sum up, an additional improvement of the long-term EBITDA margin is limited by divergent drivers resulting from the four arguments. With the reduction of employee costs due to the restructuring and with the operational improvement, we expect the 2017 EBITDA margin to be at the 2012 level. And these positive effects are offset by insufficient bargaining power and inflexibility.
Let's talk about valuation and begin with the theoretical DCF and its main input parameters. In the center of our assumption, there is the sales CAGR of 1.8%, which has already been introduced by my colleague Valerie. For the terminal growth rate, we take a more cautious view, assuming 1.6%, which compares to global expected GDP growth rate figures of around 2.5%. Regarding the corporate tax rate, we are in line with the management's expectations of 30%, which are below historical fluctuations. For the corporate discount rate, the weighted average cost of capital, we have calculated around 9%, which is mainly driven by cost of equity of around 10.5%. Eventually, we come up with a target share price of 100 Swiss francs, which supports our sell recommendation. Nevertheless, the DCF is totally dependent upon our subjective assumptions, and therefore we perform a market valuation based on a PE ratio approach, comparing Autoneum to its closest peers, Faurecia and Mania. Looking at the numbers, we see that Autoneum is currently and significantly traded to a premium right now. But how robust is our assumption? In order to answer this question, we first perform a sensitivity analysis where we just slightly change the two most decisive input parameters of the DCF approach, namely the WACC and the terminal growth rate. Remarkably, by looking at the upper bound, this level is still well below current share price. Eventually, and last but not least, we are also interested in whether the company is sensitive to the macroeconomic environment as a whole. Based on three different scenarios, looking at the bearish and the bullish scenario, we can see that the company is actually very sensitive, which exerts a lot of risk, which is further discussed upon by my colleague.
Turning to the risk, we have highlighted with our risk matrix that Autoneum is exposed to a wide range of risks that can affect its operational and financial results. For example, Autoneum is exposed to the exchange risk fluctuation due to its global footprint and due to sales that are done in different currencies. As a macro risk, we can have a look on the US car markets, where the new car demand is supported by the ease of financing, as 75% of the new cars are purchased with loans and leases. However, we expect a change in monetary policies that would lead to an increase of interest rates that are currently at a very low level. This increase in interest rates would negatively impact the new car demand and therefore will negatively impact Autoneum sales. With this slide, we wanted to highlight the last negative signal involving insiders. In 2013, when insiders were trading Autoneum's stock, they were most of the time selling it. To conclude, we see Autoneum as a reactive company in a challenging environment. Our four pillars have highlighted the fact that Autoneum suffers from a weak financial position, especially a low profitability, and from a lack of competitiveness due to low investment allocated to a sustainable expansion plan. Therefore, we do not see any further potential improvement for the company, and we truly believe that our target price of 100 Swiss francs represents the fair price for the company, leading to our sell recommendation. Thank you very much for your attention.